morning, everyone. I'm Elsa Wolf, head of Infra, the advisory department for infrastructure financing at the French Treasury. I'm very pleased to be here and moderate this session focused on energy transition and strategic autonomy. Achieving sovereignty and at the same time moving towards decarbonization is, are two goals we want to achieve, and at the same time probably one of the biggest challenges we face together. The question is, how do these goals interact? Are they aligned? Are they sometimes contradictory or opposed? And can private financing help to achieve both? That's what we'll try to explore with our great speakers today. So I'm pleased to be joined, let me start with ladies, Bérénice ARBONA. She's head of infrastructure debt at La Banque Postale Asset Management. So you will bring the infrastructure debt investors' view. Lénaïg TRENAUX, global co-head of energy, battery, mining, and industries at Société Générale, one of the leading banks in infrastructure financing. Benoît on my left, co-head of infrastructure Europe at Ardian. So you will bring us the equity investors' perspective. Alex BRIERLEY, co-head of Octopus Energy Generation. Octopus is an industrial player actively involved in renewable across Europe. And Mathias, partner at Herbert Freehills, Kramer. You will share your expertise as an energy, natural resources, and infrastructure lawyer. So let's dive in and see how these issues resonate with your organizations. Benoît, I know you've been involved in renewable energy for quite some time. Have you noticed a shift in the way you screen projects, especially since the energy crisis in 2022?
Yes, I think 2022 has been really a turning point in the energy landscape in Europe, where after the start of the Ukraine war, we have seen energy prices increasing dramatically, peaking to high levels that were not experienced over a very long period. And this has changed the views, and I think what is very noticeable is that we have seen the views of consumers, economic agents changing. Nobody today, and in particular, if you look at the companies, consider energy as a pure commodity, but much more as a strategic component in their activities and in their P&L. And for me, that's the main change. We could see that we are shareholder of Green Yellow, that is developing energy production, solar production on the site of industrial and commercial companies. And after 2022, we have seen that many companies were interested to have their own production to cover part of their needs. What is interesting also, of course, is the environment and the regulatory environment, which is always very important for investors. At the EU level, after the start of Ukraine war, EU has made new decisions. In particular, they launched Repower EU and made a very strong statement that renewables are now have a double roles. First is to contribute to decarbonation, but also to contribute to the strategic autonomy of Europe, being project where when they are in operation, you don't need to import fossil fuels or any other things. So that they are considered not as part of this strategic autonomy, which is important because it comes with additional support from Europe and from all the European countries on to promote the development. Maybe the last point, it was stressed also in the Draghi report, but we can see it in the market. For me, the key elements for energy transition and renewables to remain part of this strategic autonomy is to be able to produce energy at good price. And we see that all the renewables, in particular the most mature technologies, wind, solar, and now battery coming, have achieved huge economies of scale and produce today energy at a very, very affordable price. So that means that they will continue to be part of this or contribute to this strategic autonomy.
Okay, thank you. Lénaïg, could you please share some examples of infra or industrial projects where you see that strategic autonomy and sovereignty can meet if that happens?
Sure. I think there are many that we support or have supported. I can give the example of Ardian, which is a green aluminium project to be developed in Finland. And it's a good example of a project that addresses decarbonization of hard-to-abate industry, aluminium being a very high energy-intensive sector. And it also addresses sovereignty because it positions Europe with access to aluminium, which is a key metals across various energy transition sector. Solar panel, for example, or solar sector needs a lot of aluminium. The same for the EV sector or high voltage transmission line, for example. I can give another example still in the industrial space of AESC project, which is a project that's now in operation in Douai. It's a battery project that is located close to a Renault factory, so producing batteries that are used in the Renault 5 and Renault 4. And again, it's, I think, a good example of, first, Europe's ability to attract this type of large investment. It's a 1.3 billion investment, so quite significant. Ability to produce also at a competitive rate, which is also obviously very important and key in the electrification of the automotive sector. And I could also obviously quote Vercors, which is another project, French project in the north of France producing batteries. So there are many examples.
And thanks for those examples, very interesting. Alex, what's your view on how renewable projects can contribute to sovereignty today?
Well, I'm optimistic, so I'll start with the good news. I think from an autonomy perspective, in construction, installation, and operations, Europe is pretty autonomous. We've got the skill set here that can undertake all those things. The bad news, I'm afraid, is from a sort of rare earths and components perspective, we're not autonomous at all. I looked up a couple of facts. The magnets used in wind turbines, I think China processes and refines 100% of the rare earths that get used in them. So we're entirely reliant on China for those types of things. Solar panels, more than 80% of solar panel bits and pieces are made in China. So we are not autonomous. And I find that very irritating, but the optimism, and I share it with Benoît, I think, the optimism is that actually the wind farms and the solar farms enable Europe not only to become energy independent, and we know how important that is. It's not just what happened in 2022 and the Ukraine war. This has been for the last 100 years as Europe has imported its energy, whether that be gas, coal, etc., etc., etc. So renewables weans us off that. And I believe the conversation is also changing and education is increasing in that renewables is the cheapest source of electricity, which is so important from a consumer perspective, also as Benoît talked about. So some good news, some bad news, but some optimism that we can make that change.
Thank you. Mathias, any other examples you would like to highlight and to show how those two notions can interact?
Yeah, I will try to react to this very good presentation already of the context. What is interesting is that we are in this trilemma between competitiveness, decarbonization, and at the same time, the idea to restart our industry. And indeed, the surge of price at the exit of COVID has been a perfect timing for decarbonization, and I will take the illustration of corporate PPA. A huge search for corporate PPA at that time. Suddenly, landmark deals such as the one with Renault that signed for 350 megawatts, and that I can go up to one of now the biggest deal, that is the one from Green Yellow with Carrefour for more than 400 megawatts to be installed, but on site this time. We have seen indeed a research for this PPA because they match an expectation to have, in front of very volatile price, to have a price disconnect from that for the long term. But now we have a change of circumstances. We see that the price on the market are lower than what can propose our renewable producers that are around 55, 57 euro megawatt hour. We see that the crude tender price, the one awarded, are much higher, between 70 to 90, and consequently that's maybe something that will sound familiar, but when we speak with consumers, that's their request. They say, okay, you ask us to decarbonize, but in the same time, we need to be competitive, and energy price is key. And I cannot reach renewable energy at that price. So really here we have, I think, a lock to unlock, because energy and electricity indeed is key for decarbonization. Electrification will be indeed one of the key driver. I think we are already a part of the solution that has been developed with the BPI and now the European Bank of Investment that provide guarantees, because that's an obstacle already for many consumers to access the corporate PPA. And I think, for example, for BPI is limited to industrial actors that should be open up. And it's really, I have ETI and SMEs as clients, and that's really an ordeal for them to reach this bankability consideration. And then there is also a step from renewable developers, because when the market was really very positive for them, they came with their, I would say, project finance expectation, and okay, here it is. It's my PPA inspired from the take-or-pay PPA I'm used to have with EDF-OA. And the client had to assume suddenly the complexities, and particularly how to aggregate the electricity and how to, for example, transform that into baseload. I think one other solution and step from the developers is indeed to be able to package this, and therefore help, I would say, the consumer and the producer meet.
Okay, maybe I will add an additional constraint that we have, that's the budgetary constraint. So let's maybe focus a bit on how equity and debt provider can help achieving those goals in that context. Bérénice, do you think private debt is stepping up fast enough? And what are the main market trends that you see at LBP Asset Management?
Thank you, Elsa. Yes, indeed. Private debt is stepping up, but both the scale and speed still fall short of what is needed to meet the dual challenge of energy transition and strategic autonomy. There's a recent report from BCG pointing out that 12 trillion in infrastructure investment will be needed between now and 2040 to restore Europe's competitiveness. That translates into 800 billion per year, or 3.5% of European GDP. So, and it's more than twice the historical average. So it's a huge wall. But it's not also about the amount, it's also about speed of deployment. To close the infrastructure gap, we need to accelerate dramatically. 6-fold for EV charging, 5-fold for data centers, and at least 2-fold for water, grid, and buildings retrofit. So private capital definitively will play a crucial role, as public budget alone cannot carry the burden. As asset manager on our side, we need to contribute to mobilized capital by designing strategies that both fulfill investor needs and also evolving market trends. Recently, over the past few years, we have seen 3 main market shifts. The first one is a growing investor appetite for infrastructure projects that combine both environmental performance with strategic relevance. In other words, investor wants not only projects that are profitable, green, but they also want projects that are geopolitically useful. It's no longer just about financing green assets. It's also about resilient supply chain, local manufacturing, and financing companies that can scale and stay, which is also very much important. On our side, we have adapted our investment strategy accordingly by trying to finance projects that sit at the intersection of sustainability and sovereignty. For example, we have recently supported investment in battery storage, a sector that is essential for both climate goals and strategic autonomy. The second market trend we have seen is a broadening of risk appetite. Infrastructure debt was traditionally focused on low risk, stable cash flows, the usual, I would say boring assets. Today, we are seeing an increasing interest in more complex project and financing structure, provided that they are well structured and aligned with long-term policy goals. This is particularly relevant for sectors like bioenergy, circular economy infrastructure, or battery storage projects, which are all critical for sovereignty. Finally, there's a last major structural shift which is underway through the democratization of private assets, in particular with the access to retail. With the LTIF2 regulations, we have seen a definitive game changer. It opens the door for individuals, investors to access long-term infrastructure debt and equity via transparent, regulated vehicles that are aligned with European priorities. And this is essential if we want to mobilize capital at scale, not just from institutional investors, but also for citizens who want the savings to support energy transition and industrial resilience.
Thank you. Benoît, are you sharing this view? Do you think green and resilient infrastructure assets are becoming more attractive for investors, in particular in the context of rising geopolitical risk?
Yes, I agree with what was said. We continue to see that investors globally continue to increase their allocation to infrastructure in general. Well, if we take the last figures of our fundraising, we see that Europe is around 40-50%, but most of the capital is coming also from North America, Asia, Middle East, so from everywhere in the world. That is a good news. I think Europe is considered as a very attractive market for infrastructure and energy in particular. It has a very long experience of developing projects with private financing. It has a very stable legal framework. So all this matters for investors, and it's the largest market in terms of in numbers of projects. Recently, we see also appetite for Europe, probably relating to a certain instability in other regions and maybe lack of visibility, whereas Europe continues to be considered as a place where that offers this visibility. So I think overall we are very positive. I think if we add to that Europe has all the industries in place in infrastructure and in energy to raise capital and finance projects. We have large banks that are among the top players in infrastructure financing for a very long time. Today and more recently, we have seen the emergence of infrastructure funds, and there are many players in Europe. So I would say all the organization, European organization to find financing is in place. And maybe I would stress a last evolution that we see, that is a trend in all the private market industry. All the general partners are starting to open their investment, their funds to the retail investor, through, in particular, banks managing wealth and That is, well, in Ardian, we are, for example, launching a fund dedicated to retail for infrastructure that will invest in the same asset than the fund that we have raised. And I think we see this trend developing. It's a good news for Europe because it means that a part of the savings of people in Europe will be able to be invested in this large project. So we always say that Europe lacks of capital, lacks of vehicles or means to invest and to develop projects. And I think for at least infrastructure and private infrastructure, we have a lot of means, a lot of capacity to finance projects.
Thank you. Lénaïg, do you see SocGen and other banks willing to stretch out their risk appetite for more complex and risky projects, such as a battery project that you mentioned? And how can we de-risk this project to make them more attractive for debt provider and investors?
Yeah, definitely. I think we have seen banks, and one of them financing a much more complex project, as it was mentioned. I think at Société Générale, we see it as one of our key missions to finance, industrial project linked to energy transition. We have actually even put in place a dedicated envelope that allows us to finance project at a much earlier stage than we would normally do. With a view really to be there to seed the financing and unlock sometimes the investment. And that has been very successful. We in the process of increasing that limit. Of course, this project, this industrial project, are far more complex than the traditional infrastructure project, as we have said. It's more difficult to secure long-term offtake. You have potentially some technology challenge. Obviously, competitiveness is a big topic as well, as we mentioned several times. So it's more risky. And when we see as well some of the challenges faced by the battery sector, it means that there's increased level of scrutiny, of course, in how we analyze the risk. The industrial project also is probably something to have in mind, are usually part of very complex supply chain, value chain, which means that projects are usually dependent on other projects. So, adding complexity to the complexity. So how to de-risk? Obviously, you have the traditional, structuring tool that are widely used in project finance. But I think another way to look at de-risking is partnership, and it can be a strategic, technology partnership. Partnering with the players that have a track record and expertise, maybe even Asian players, and that allows you to maybe bring also the expertise in Europe. It can be partnering as well with other players along your supply chain. That can also be a way to secure your access to critical supply. And of course, the public-private partnership is also very important. Obviously, Europe or the nations are there to provide a framework to the industrial policy, but also guarantee a stable tax regulatory environment. That's very important because if you can flag a project as strategic and critical, obviously it's very helpful for banks, for investors. I think there's also ways to provide financial support. Maybe it's direct subsidies, but also potentially a framework, some price protection mechanism. And maybe that's just, when you start to, a new industry, and until that industry becomes more mature. So there's a number of ways which I think are very important if we want to really unlock all the pockets of capital.
Okay, thank you. when I hear you, I hear that to achieve strategic autonomy, we also need to scale. So let's see how we can move from individual projects to a consistent infrastructure network in terms of energy, storage, grids, and supply chains. Mathias, maybe a word on how does the EU regulatory framework pave the way for European strategic infrastructures?
Yeah, thanks, Elsa. Yeah, the EU regulatory framework is definitely central and has a pivotal role. To be honest, it has for decades concepts and regulation implemented in the 90s, such as the Trans-European Network for Energy, TEN-E, or the TEN-T for transport, have laid the foundation. It has been bundled with the project of common interest that really try to have this aim that you just recalled of outlining the strategic aims and enable, or at least push the member states to develop tools to enhance and accelerate those projects considered of common interest, and notably encourage to have a single point of delivery for the permits, fast tracks, etc. But it's here that already we touch the reality check, and that we have experienced, notably for interconnectors, that we need the will of the member state to match the one of the European Commission. And if the member state do not translate in their national legislation these tools from the PCI, basically the developers can get this status, but do not benefit, basically, of it. And the new tools developed by the European Commission, because they are a bit like lawyers, they are green guys, so they like to recycle, so they have recycled the PCI toolkits for the Critical Mineral Act, for example, as we just mentioned this, with this idea also that we should encourage, one of the three pillars is to develop projects located within Europe and encourage them again with single point of permitting, fast track, etc. So unfortunately, I will have the same observation. They can make it only if member states are relying on this. And we see that, of course, in the population and in public participation in all type of projects, but mining in particular, of course, local interests make it even more difficult. So the political will is even more strongly needed because the obstacles are quite high. And to conclude, the last package that is maybe interesting and that is the last, I would say, stone to this path is the Net Zero Industry Act. That is a quite complex vehicle. I would have need at least, I think, 10 slides just to outline all the different package. So unfortunately, that makes its visibility a bit complex, but we can see again this idea to have strategic purposes and in order to scale up manufacturing capacity, accelerate deployment and reduce dependency on external suppliers. So we have this recurring theme that is here, and the idea also, like in the Critical Mineral Act, that otherwise we need to find relevant and strategic partner outside of Europe in order to have a reliable source.
Thank you. Alex, maybe as an industrial player, what initiatives are you taking to gain greater control over the supply chains?
Well, I think it's super complicated. We do have some initiatives, but we have to sort of recognize what we're taking on as Europe here. So the Far East is just structurally more competitive for this type of thing than we are. The sort of cost of buildings at least 2 times cheaper, cost of workforce at least 3 times cheaper, notwithstanding the expertise to actually process, refine, manufacture, etc. We are lagging a long way, and history doesn't really paint a good picture. Most recently, Northvolt, I think, is the most famous example. So it is super, super complicated and super, super difficult. But we try to think about how we can make this make sense. So one way we do that is to think, well, look, why are we trying to compete? Why don't we work with? And an example there is we've signed a memorandum of understanding with a Chinese company called Mingyang. They're a huge turbine manufacturer. They produce, we believe, very cheap but very good wind turbines. But there is a security issue that Europe faces with some of the software in those turbines. Nobody wants our TVs to be turned off in the middle of a Paris Saint-Germain win by the Chinese at their whim. So we sit there and we think, right, are we going to try and compete and produce steel more cheaply, or do we let Mingyang do that and we take on some of the software and the intelligent parts of that kit? So we're working on that at the moment, and that makes a lot of sense to us, and we're investing a lot of time and resource in making that work, and that brings cheaper electricity ultimately into Europe. And actually, when President Macron was in London, I think a few months ago, 2 or 3 months ago, he talked about this issue and talked about perhaps the need to work with the Chinese and the Far East in the area of renewable electricity. So I totally agree with that sentiment. I think we have to do that. That's the first way we're thinking about getting involved in the supply chain, where we can partner and make things more easy for external companies. And the second way is super complex. So the example I'll give here is how do we unlock value for our investors and our customers, most importantly, that other companies outside Europe can't. And I think this comes into sort of the integration within the grid. And the example I'll give is we actually manufacture, assemble, install heat pumps, both air source heat pumps and ground source heat pumps. And we're doing that manufacturing in Europe at the moment, actually in Ireland. And why are we doing that? We're not structurally cheaper to build a heat pump, but we are finding value in the heat pump that I argue others can't find. So we're an electricity supplier. The heat pumps deliver competitive heat cost to homes. It's great, it's decarbonized. But when properly controlled and integrated in a wider energy business, actually they're like batteries, and you can monetize the flexibility that heat pump gives you by selling that type of thing to a system operator and delivering some of that value back to the consumer. So I suppose in that regard, we think we've got an edge in the business model and are able to unlock more value than a simple OEM could. So those are kind of two examples of how we're thinking about bringing things closer to home.
Thank you. Bérénice, how is La Banque Postale Asset Management helping to boost the emergence of European industrial champions and resilient companies?
Let's be honest, infrastructure alone won't solve Europe's competitiveness challenge, unfortunately. We must also address gaps in innovation, technology, education, but without infrastructure, none of those sectors can scale. And what is important to have in mind is that Europe's economic reset depends on a strong infrastructure backbone. How to do it? At LBPAM, we have tried to translate this challenge into 3 main initiatives aligned with the 3 market trends I've mentioned earlier. First, we are working on a new senior crossover infrastructure debt strategy that will be dedicated to strategic European infrastructure. What's new and how to do it? In fact, we have tried to add to usual financial and ESG screening tools a proprietary methodology that helps us to identify and support projects that makes Europe stronger when it matters most. How it's working. This methodology allows us to assess sector by sectors whether the infrastructure project we consider to finance will contribute to the European investment roadmap for competitiveness and sovereignty, and also align with EU priorities such as digital transitions, environmental sustainability, and also strategic autonomy and essential assets. So these new screening tools will enable us to have a strategy that will be dedicated to restore the Europe competitiveness through investment in infrastructure debt. Secondly, we are also launching a new high-yield infrastructure debt strategy. Why is that? Because we have said earlier that projects nowadays are more complex. All projects less frequently fill the plain vanilla box. In fact, it's more like a spicy recipe with a lot of complex ingredients. And in order to cook a project, you need to have a well-equipped kitchen with skilled chef. And it's very difficult. But thanks to this fund, we will be able to take calculated risk and to provide flexible financing to make project bankable and also to support portfolio development. Finally, we're also opening the door to retail investors, thanks to our newly launched Capital Solution Department, and thanks to also the LT2 initiative, individuals will now be able to invest in long-term infrastructure projects, thanks to transparent and regulated vehicle. So all in all, how to help to build European industrial champions? We need to mobilize private capital. We need to structure innovative debt funds, and we need to align investment also with Europe's strategic roadmaps.
Just that.
Simple.
Benoît, you just raised a new infra fund of 20 billion euros, I think. Will you broaden your scope and go beyond just core infrastructure with that new money?
Well, I think we increased the size of our fund because in infrastructure and energy in particular today, we see that needs are growing very quickly. If you take the renewable energy industry, we have seen the market accelerating after 2015 and the Paris Agreement, and in Europe, the Green Deal. That means that today all companies are facing huge opportunities to build a new project, to expand. And we see also that it's a market that continues to be fragmented. It's not consolidated. So even mid-sized companies, small-sized companies, they have opportunities to grow because nobody can do everything. If you look even at the largest companies, the needs are so huge that they need to focus on certain areas, but they cannot do everything. So for investors like us, it means first we need to provide, when we support a company, we know that we need to provide more and more capital and debt to help the company to grow. And it's also a market that is changing, not only on size, but on the way to develop. We see a trend, an increasing industrialization of the sector that is driven by the largest players, the big utilities, the oil majors that have applied, industrial approach on development. And that's the second part of our vision is this industry needs capital, and in particular for mid-sized company, you need to help them to continue to industrialize their process, because at the end, we see also that over the last 10 years, there are more opportunities, but there is a constant pressure on prices. If you take the public PPAs now, companies need to go through auctions to get tariffs. It means they need to deliver the megawatt at the right price, otherwise they are not selected in the auctions. And that's the same for PPAs. So we see really a big change in this industry, a lot of things to do, a lot of opportunities that needs investors that have this capacity to support the growth.
Okay, thank you. So maybe to finish up, each of you could have a closing word on how you see the infra projects and how do you project them, let's say, towards 2030? Any particular focus you would like to highlight? Maybe Alex, if you want to start.
Sure. So by 2030, I think in renewable electricity, we will need to bring the consumer and the demand for electricity much, much closer to the generation, and it will become increasingly complex on how you protect and optimize value in that world. I think data centers is kind of today's very, very trendy example of the need for electricity and that increasing demand growth. I think the need for cheap electricity, particularly in Europe, is going to be the single most exciting thing happening in infrastructure between now and 2030.
Lénaïg?
Sure, I think I will re-highlight, the need for partnership and the need to have everybody around the table, partnership across value chain, leveraging on each other expertise, and of course, access to cheap and reliable energy that is key for any industrial development.
Thank you. Mathias?
I will go back to what I said in the introduction. We're really in this trilemma between competitiveness, decarbonation, and energy prices to find, yes, the right solution to this. We will have to make, I think, choice in the chain of value because we see everything that has a green premium has a cost, and in this trilemma, we see that is the obstacle for H2, for CCUS to find the right price. So indeed, we'll need to make a choice in the chain value to encourage where we want to pay this green premium.
Thanks. Bérénice?
I hope that by 2013 we will be able to have both energy transition to help to finance competitiveness of Europe, and also to do it, that in order that people and individuals realize that it is in their own interest. And without social acceptance, I think it won't happen. And I think we need to put a lot of effort also in education, in explaining, in planning, in order to demonstrate that, okay, it's difficult, sometimes it's hard, but it is needed in order to restore competitiveness, to be more autonomous, and to live in a more sustainable world.
Thank you. And Benoît?
Well, I think that the energy transition is a quite recent process, and that started 10 years ago in 2015. So the industry, the energy transition industry is still a young industry. We have seen a very strong acceleration, as I said, after the Paris Agreement. Today, we see that energy demand is not exactly at the level that was expected. So we see also comments around renewables. Is it not going too far, too fast? So we are in a bit a more low cycle. But for me, and the vision we have is normal. You are in a transition, so there are up and downs. So probably we remain confident that by 2035, the industry will continue to develop. Probably the main project that needs to be built, the main capacities that need to be built will be there, and we may see other evolution in the industry by that time.
Thank you very much. I think it's very interesting to hear your vision and your perspective of that world. Thank you for sharing these insightful thoughts and examples. It seems there is indeed a path to pursue decarbonization and at the same time trying to keep control over critical technologies and supply chains. It's not an easy one, but it's a needed one. So let's all work on it. I'd like to warmly thank our panelists today. Thank you very much. And I wish you all a very pleasant day with many more exciting sessions coming ahead.